Would you believe me if I told you that a trader who is wrong more than 70% of the time still managed to turn $30,000 into $80 million? Sounds insane, right? But that's exactly what Michael Marcus did, one of the greatest trend followers in trading history. In this video, we'll break down 1. Who Michael Marcus really is, 2. His trading method with real chart examples, and 3. Finally, the key secrets behind his incredible success. So let's dive in.
Part 1. Who is Michael Marcus? Michael Marcus started like many of us. Small capital, big dreams, and plenty of mistakes. In the early 1970s, he began trading with just $30,000, and within months, most of it was gone. His early trades were filled with emotion and overconfidence, and he admitted that he almost gave up entirely. But instead of quitting, Marcus treated every loss as a lesson. He learned, adapted, and refined his approach. That decision to stay in the game and keep improving eventually turned that modest $30,000 into more than $80 million in personal trading profits. Marcus became known as a trend follower, a trader who focused on capturing large, sustained moves in the market. He wasn't chasing day-to-day fluctuations or trying to predict tops and bottoms. His focus was on identifying the major waves, the kind driven by institutional money, and riding them as long as possible. His talent eventually earned him a position at Commodities Corporation, one of the most respected trading firms in history. There, he not only built his fortune, but also mentored a young trader named Bruce Kovner, who would go on to become a billionaire hedge fund manager with a net worth exceeding $9 billion. Marcus's story is proof that trading success doesn't come from luck or prediction. It comes from discipline, patience, and the courage to keep learning when others give up. And that's one of the greatest lessons every trader can take from him.
Part 2. His trading method. Michael Marcus's trading philosophy was built on one simple foundation: follow the trend. His system wasn't complex, but it was executed with precision and discipline. Let's break down how Michael Marcus traded, step by step. Step 1. Trade only in clear trends. Marcus believed that most traders lose because they try to predict reversals instead of following the obvious direction of the market. To define that direction, he used the 50-day and 200-day moving averages. When the 50-day MA crossed above the 200-day, it signaled a confirmed uptrend, time to look for buying opportunities. When it crossed below, the market was in a downtrend, and Marcus would shift to shorting. Simple, mechanical, and emotion-free. Step 2. Identify entry points using support and resistance levels. Once the trend was clear, Marcus didn't rush in. He waited patiently for high-quality setups, clean breaks of key levels confirmed by surges in volume. Step 3. Ride the wave and trail your stop. When the trade moved in his favor, Marcus used the 20-day moving average as a trailing stop. This technique locked in profits while keeping him in strong moves for as long as possible. It was a blend of patience, structure, and discipline, the hallmarks of a true trend follower.
Real example 1. NVIDIA, long setup. In early 2023, NVIDIA's 50-day moving average crossed above its 200-day, confirming a powerful uptrend was underway. Between August 2023 and early 2024, every time NVIDIA's price approached the $50 level, sellers stepped in, pushing it back down. That repeated rejection clearly defined $50 as a key resistance zone. But something subtle was happening beneath the surface. Each pullback within that base grew progressively tighter, first 18%, then 15%, then 9%, and finally 6%. This kind of contraction is a classic sign of institutional accumulation, big money quietly positioning before a breakout. Marcus's ideal entry came when NVIDIA broke through the $50 resistance on heavy volume, confirming that demand had overpowered supply. What followed was a textbook trend-following move. NVIDIA's stock surged nearly 90% in just 2 months, a perfect example of patience, timing, and trend alignment.
Real example 2. NVIDIA. Short setup. Now let's flip the chart. In early 2002, NVIDIA's stock began to reverse sharply lower after years of strong gains. By April 2002, the 50-day moving average crossed below the 200-day, confirming that the uptrend had officially turned into a downtrend, a clear sign of weakness that Michael Marcus would never ignore. However, between April and May 2002, the stock staged a short-lived rebound, rising about 34% from its lows. For many traders, that bounce might have looked like the start of a recovery, but Marcus would have seen it differently, as a bear market rally forming a temporary support zone near $0.25. When NVIDIA broke below that $0.25 level on heavy selling volume, the breakdown confirmed his short setup. From there, the stock collapsed more than 70%, proving once again that the real power in trading doesn't come from prediction, it comes from discipline and respect for trend and structure.
Part 3. The secrets behind his success. Here's the truth. Michael Marcus didn't become a trading legend because he discovered some hidden formula or secret indicator. His real edge wasn't about predicting the market, it was about discipline, risk control, and emotional mastery. Rule number 1. Cut losses fast. Marcus understood that survival was the foundation of long-term success. He once said, "The most important thing is to stay in the game." For him, that meant limiting each trade's loss to around 2% of his total capital. If a position moved against him by that amount, he exited immediately. No hesitation, no emotional attachment, and definitely no averaging down. He knew that protecting capital was far more important than trying to be right. Rule number 2. Never add to losers, only to winners. When a trade was working, Marcus wasn't afraid to press the advantage. He'd add to profitable positions while simultaneously raising his stop loss to lock in gains. This way, when he was right, he made the most out of it. When he was wrong, losses stayed small and controlled. That simple principle, cutting losses short and letting winners run, became the cornerstone that allowed Marcus to turn $30,000 into $80 million.
If you've stayed with me until this point, I've got something special for you. Years ago, I used to mentor traders in live in-person sessions, real hands-on training where we broke down charts, executed trades together, and learned how to think like professionals. The tuition fee back then? Several $1,000s per student. And honestly, it was worth every cent because the results spoke for themselves. On the screen, you can see some of those traders, people who started out just like you. Some of them went on to become consistently profitable. Others even became professional fund traders, managing money for institutions. Not everyone became a millionaire, of course, but nearly all of them reached a point of independence, where trading stopped being a struggle and started becoming a business. And here's the good news. Today, you don't need to pay thousands of dollars to learn those same principles. For just $25, literally about 1% of what my students once paid, you can access the Trading Mindset and Method Masterclass right here in the YouTube member section. Think about it. For the price of just a few cups of Starbucks coffee, you can gain the mindset and method that could potentially change your entire trading journey. I've already opened the door for you. The only question left is, are you willing to trade a few cups of coffee for a chance to completely transform your trading career?